Hello. How's it going, everybody? Welcome to the Capital Hungry Market Analysis and Trading Stream. How's everybody doing this Thursday morning? Roughly 7:40 a.m. Eastern, August 19th. I usually do these streams on Wednesdays, but we had some technical difficulties yesterday, but we're back up today. We're back up online today, so. Can you guys hear me in the Zoom chat as well as the YouTube audience? Everything good with the audio and visuals before we start jumping into our routine stuff? Okay, perfect. All right, let's just start out with the simple stream reminders. Remember, every single one of these live streams is always saved and recorded, so you can always rewatch it at your pleasure whenever you want. Make sure you read the stream description, as well as for the YouTube audience, the stream reminders on your screen. We have tons and tons of free resources within the Capital Hungry service overall across Twitter, Telegram, YouTube itself, and everything is linked either on the YouTube layout in the YouTube description or on your screen right now. Okay, we have a bit of like a routine that we go through as we're trading the financial markets, and we always start out with our mental reminders as manual retail traders. Then we go through our analysis of pre-planned trade ideas on gold, GJ, GPUSD, Euro USD, USD CAD, and US 30, as well as looking at economic events, market sentiment, and key fundamental points. After I go through all of that routine, sort of routine stuff there, then feel free to ask questions about other pairs, send charts, send your analysis or questions, and I'll answer it as I'm reading the stream comments if I get the chance to do that. Okay? Okay, so let's get this stuff out of the way here. We do have a pretty eventful day today, in my opinion. We had some very solid movements overnight, but first things first, as manual retail traders, remember that trading psychology is one of the most important factors of our trading, and majority of people, 99% of people who lose, they don't have issues with the technical charting or with the act of taking a trade. It's with their risk management, their emotional control, and lack of psychological development that really leads to crashing accounts. So make sure as a manual retail trader that first you have a trading plan, you follow that trading plan and set of rules for yourself to create that discipline and consistency over time. You also focus on the risk management, probability, and number side of trading. Focus on your long-term vision. Keep emotions out, and this will probably give you the highest probability to avoid crashing your account and surviving in the markets and potentially becoming profitable in the long term. All right, so I don't expect too many people to come into the YouTube audience, as I think Raja's streaming as well, and this isn't usually my normal streaming day. But for anybody who does join late, because you know how the hyenas always come late when the volume actually comes in and they say, oh, what's going on now? GJ buy, GJ sell. Just tell them they can always rewind this. They can see the analysis. They can see exactly what I'm looking for and why, and not to panic. All right. But anyways, some recent fundamental points and what we've been using to our advantage in the Capital Hungry private channel. As well, if you guys followed my last free market update and last YouTube short, where we were talking about market fear starting to develop and why we were selling GJ, okay? But anyways, short-term market fear is developing. The way we identify this, and I'll show you guys after I put this little animation away, is we can notice that majority of equity markets across different regions are giving us some pretty sharp declines and pullbacks from their all-time highs. And so it's not like we have mass panic that's causing stock market crashes. It's not anything of that nature. But the market does move in waves, and we do have these periods of short-term fear within the long-term bullish run we've seen on the stock markets over the last year. And anyways, we're in that short-term fear phase now, as equity markets are giving us a pullback and some bearish moves from their highs. We're also seeing economic data is not as impressive as investors are expecting or central banks are expecting. We have issues arising with the Delta variant as well as Middle Eastern tensions developing as well. And when we look at some of our safe haven currencies as well as volatility indicators, you guys can't hear me? Hello, hello. Getting some voice complaints here. Did I just speak for no reason? I said a lot of stuff already. Is my mic low? Okay. Okay, it's good? Okay, I'm just going to continue then. I usually talk pretty loud already, so I'm just going to continue. Anyways, when we look at the US dollar, the volatility index, as well as the Japanese yen standalone, we can see that we've seen more intraday bullish movement on our safe haven currencies or our volatility indicator, as well as bearish movement on the equity market. So let me put this away right here quickly. Right here we have obviously the US dollar, Japanese yen, and the volatility index. These have been far more bullish on the intraday time frames just over the last week and a half period. And we can see when we're looking at our global stock markets, I just have it more highlighted on the USA Dow Jones and the UK 100, the FTSE. We can see these very sharp declines even in the Asia Pac regions, Asia markets with Japan and China, Euro markets with Germany. So what it shows us is a short-term shift in market sentiment with fear developing. This is the reason when you can see that we had a clear decline in the UK equity markets, short-term strength in the Japanese yen, that on the intraday time frames we've had much more bearish market structure on pairs like GBPJPY from their highs as well, right? We've had this bearish market structure from this previous price sensitivity area and highs failing to break, and this is just on the higher time frame here. Obviously, when we really zoom out on GJ, what I'm potentially looking at is that we can come all the way down in terms of retesting bullish market structure all the way down into the 149.5, 148.5 areas here to revisit these previous price sensitivity lows in this region. But we want to be very mindful as we are digging into this price sensitivity area. But for the time being, we are respecting that bearish market structure on the intraday time frames after having this pullback from the highs of 156. We do have that Japanese yen strength, and we do have that decline in the UK equity markets. Now, there is not a direct correlation between the equity markets and a specific currency. For example, if the UK equity market and stock market is bullish, it's not 100% guarantee that GBP is going to be bullish. This is just information about market sentiment and investor behavior. It pretty much shows you that, for an example, when you're trading a pair like GBP against the Japanese yen, GBP, the British pound, is a risk currency against the Japanese yen, which is a part of your basket of safe haven currencies. So when markets are very optimistic, investors are very optimistic and confident, you're going to see money outflowing and coming out of the safe haven currencies and going into obviously the equity markets and stock markets, riding with the central banks, and respectively going into the risk currency side. But when you're seeing a decline in the stock markets, it's not showing you that GBP is extremely weak. It's showing you that investor confidence within the UK market is softening. So that can give you more indication about potential short-term strength or weakness on the British pound. So it's fundamental confluences that tell you more about in market sentiment and investor behavior, whether you're in a more optimistic state in the markets or whether you're in more of a fear, uncertainty, or doubt state, and you use this information alongside the technicals on the currency pair that you're trading, right? So with what I'm telling you guys, it makes sense with what we're seeing on GBPJPY downside here, because we're seeing a decline in the UK equity markets from those highs and stock markets across the world, right? It shows us that the investor confidence within the stock market in the short term is starting to drop in decline, and we're seeing a profit taking by buyers at those new all-time highs printed, right? not any cause for mass panic or a crash on the market, but it's causing that pullback phase. At the same time, your US dollar, your volatility index, and your Japanese yen stand alone individually, whether you're looking at the currency index on the dollar or the Japanese yen currency index, are bullish. So then when you come to the pair like GBPJPY, you can see that it is obviously going to be more bearish or higher potential of being bearish. Now when we're looking at the daily time frame, you can see that we're pretty much just playing this bearish market structure here, right? I just answered the question Hardik had, but YouTube audience isn't the brightest, but it's okay. I still love you guys. So anyways, so now you can see that a lot of people, when GJ is in this pullback structure, we were in a similar phase to like here. We had a sell-off move, a pullback, and a continuation to the downside. So on GJ here, we were playing this bearish market structure on the lower time frame. Now, when we had this pullback upside move that looks like it's quote unquote breaking the bearish market structure, you have to look at the overall price action, and you have to look at the overall stretch that sellers took here. When you're looking at this stretch of sellers price action from this order block and consolidation zone, you have a pretty aggressive sell-off in terms of, and this is the 4-hour time frame, you have stronger bearish candles, more consecutive bearish candles, minor bullish pullbacks and blips, all the way down to break this previous price sensitivity area here and have a pretty significant drop of about from 152.8 all the way down to 150.6. This upside move and pullback from this low printed is very well correlated to this downside drop. You know what I mean? It's just a pullback in relation, almost roughly 50% in correlation to this downside drop. So in Capital Hungry last night, the private chat will tell you guys, I think Jesse took, anybody else take those sells we were calling last night? But pretty much what we were looking for was pullbacks to private chat. And who else took those sells? Who else took those GJ sells last night during London session? Private chat. So pretty much all we were calling here was pullbacks to 151.200 area, where we had this high peak during the New York session. We were looking for new daily candle pullbacks to this area, breaks below 151.2 sells, breaks below 150.8 sells, and breaks below previous low sells. Okay? Now, we are still in that seller's bias. We are just waiting for further execution points to adapt to the New York trading session now. So let's look at the lower time frames now on GJ, and you can see with so far some short-term fear developing with Middle Eastern tensions, equity markets having that decline, specifically for GBPJPY, the UK markets having that decline, Japanese yen individually, and the US dollar and volatility index holding short-term strength. When we come to the hourly time frame here, we're still very bearish, right? We are still very bearish here. You can see that even this upside move was a lot more corrective versus this downside stretch where you had weaker bullish price action, this consolidation zone, and then boom. Almost like when you're looking at in terms of the price action reading, I always like to look at volatility in terms of the size of the candles. And you can see this pullback, which extended for a day and 1 hour, got pretty much canceled out in a couple of hours here, right? Just within 3 hours, you had a day's worth of pullback structure get canceled out, and sellers continue to jump in the market from these better price points after that pullback phase. Now, you can see we had a pretty strong rejection at 149.8, which is digging into that price sensitivity area to the left here. But with the current stretch of price action, I do want to still, even if we get a deeper pullback to 150.5, I still do want to target these previous lows at 148.8, and it does look like we have the potential to do that. When I'm looking at the price action here and this downside stretch, it's very similar to almost looking here having this pullback and downside stretch. So this little bullish bounce for the time being isn't really causing me to get out of my sell bias is what I'm trying to say. And when we come to the 30-minute time frame here, you can see that this upside bounce, even though it was very aggressive, it's still correlated in relation to this aggressive drop we had. It's just the pullback here. You can see the exhaustion signs here as well. So I'm going to be looking for 2 sell areas during New York Open and NYSE hours. Either one, we bounce off 150 flat here, and we get a double top at 150.2, right? And the high risk, high reward sells at 150.2. Or we sell below 150 and the safest sells below 149.8. So these red boxes are where I'm going to be looking for sells after New York session opens up, because we do have some US economic data that can impact market sentiment at 8:30 a.m. Eastern. But I am going to personally be, as price action develops, be looking for sells in these areas through NY session volumes. I would only be looking for buys on GJ if the global stock markets end up turning bullish through the New York session, if Japanese yen goes bearish when we watch it individually, and if GJ broke above 150.500 area. I would have to come back above these previous lows and at least correct more than 50% of this downside drop to show me sellers exhausting out of the market and buyers jumping back in to shift out of this short-term fear sentiment. Otherwise, it's only 7:57 a.m. Eastern right now. The stream's going to be running for a couple of hours, so we will experience the New York Open volume as well as NYSE volume in the new 4-hour candles. And remember that these are scalping sessions, so we're looking to be in and out of the market fairly quick, catch our 10, 20, 30 pips with the session volume, and then call it a day there. So we have to have patience as we're waiting for these potential setups here and not rush anything or have poor timing as a scalper. All right. The US data is not going to have a direct impact on GBP, but it will have an impact on the Japanese yen with market sentiment, right? The Japanese yen, the Swiss franc, and the US dollar are all safe haven currencies and a part of the safe haven currency basket. So if we have extremely strong rebounded US data, that can bring short-term optimism, which can help the US stock market push up and also bring weakness to the yen and bring weakness to the volatility index. So it would have a sort of byproduct side effect impact on GBPJPY with the market sentiment through New York session. Okay. Man, I need to get some water here. Raspy this morning. But yeah, that's the GJ analysis for now. Any questions about GJ from the Zoom chat or from the YouTube audience? Otherwise, I'm gonna move on to some gold analysis right now and just also look at some of the economic events we got going on. So I'm just gonna clear my screen here on GJ. You guys can always rewind it. Let's go to our beauty gold here. Okay, this is gold on the hourly chart. Have the majority of you in here got to watch the last market update webinar? I didn't get that many views, probably 1,000 views, but the gold analysis for gold bulls is still the same, but it's going to be heavily dependent, if you guys look on your screen right now, about the 2 US data reports we got. Now, we have to be very cautious, and we are not going to be taking any trades on dollar pairs such as gold, which is obviously gold against the US dollar, GBP USD, Euro USD, or UCAD. We're not taking any trades on these dollar pairs until after 8:30 a.m. Eastern. And I'm going to tell you guys why, okay? If we had one singular economic data report, like just the US initial jobless claims, then we can possibly predict that data more clear cut and compare it to previous jobs data we've seen in the prior weeks, like non-farm payroll, unemployment rate, right? Jobless claims, but JOLTS job openings and so forth. But here right at 8:30 a.m. Eastern, we have economic data from the job sector, but also economic data regarding the business index and manufacturing index as well, okay? Which both have an impact on the US dollar. So the issue is, as we observe the charts technically, if these data reports conflict, meaning one is really good but the other is very poor, then it can bring a lot of uncertainty and potential technical whipsaws in the chart. Do you guys ever see when news comes out during New York session, and a lot of you might not actually follow the news or individual reports, but you're looking at the technicals on gold and it whips down 50 pips or 100 pips, then whips back up 50 pips and 100 pips, and you have obviously just it creates sort of this double-ended dildo candle where you have a little candle body and then a wick on both sides like that. As a retail trader and scalper, you don't want to get caught in some bullshit like this, do you? Right? And there is high probability, especially on gold, that can happen if we have conflicting economic data. But pretty much what I'm looking for is I want to see one-sided economic data. I want to see either both the manufacturing index and initial jobless claims be poor, and then easily take safe buys and continuations above 1795, okay? So dependent on this US economic data, I personally think it can be a little bit more lackluster or less impressive, and if we have that weaker economic data, it will increase the demand of gold as a safe haven precious metal in the short term, and we will see buyers flood in and potentially break above 1795, taking us higher. Right? So the buy area I'm looking for is going to be above 1795. We were calling 1781 buys during London session in our previous market update webinar, but that has already played out. So I don't want to enter again in this intraday range we are in here. And we're more just going to be playing the bullish market structure. So what I mean by that is, you can see the way I describe market structure to you guys, right? This was a heavy market maker price grab at 1680, exact previous price sensitivity area lows in the higher time frame. You have this upside move, pullback, upside move, pullback, upside move, pullback, upside move, pullback. If you look at the market structure simply, regardless what you're looking at, you can see that it's still very bullish. You're only having upside move, pullbacks, and continuations up, upside move, consolidation zones, and breakouts to the upside as more buyers enter the market and we keep extending to new highs, right? So with this 1795 high printed, even though it's more of an aggressive pullback, I still see this as a pullback phase that pretty much went to go retest previous high price sensitivity areas and snap well back above 1781, maintaining that bullish market structure. If the economic data on the US side at 8:30 a.m. Eastern is poor, we're going to be looking to take buys above 1795 safely, even if maybe even 1789. So when I zoom in more here, we're going to be looking for buys in two areas, depending on the economic data. First, we're going to let the data get released. Then we're going to look at the live release, analyze the data, and dissect it. Then address the technical impact of the data, then adapt accordingly for a trade. All right, so this is what I see. If the US economic data, both reports are poor, non-impressive, and don't meet investor expectations, the higher risk buys is if we break and come above 1789, safest buys above 1795. This is with poor economic data. All right, letting the data get released at 8:30, dissecting it, digesting it, observing the technical impact, and then adapting accordingly. Usually the move will continue after a NYSE pullback into London close and further, right? This is going to be the poor economic data pathway for gold, and safest buys if we clear the previous high at 1795, okay? I am personally only switching my gold buy bias. You guys know I don't switch my bias frequently, right? I'm going to play the same bias and structure because pretty much we've seen that been respected from these lows here, where every pullback phase, as you identify the pullback phase, Once you break out of the pullback phase, and this is the same thing I show you guys time and time again across different pairs, commodities, stock markets. Once you break out of that pullback phase, you go to at least revisit the previous highs and potentially break into new highs. So if we are complete of this pullback phase here, economic data is poor, we can take 1789 and at least revisit 95 with the potential to break out even higher in this market structure. All right. Now, with that being said, this is going to be dependent on that economic data release at 8:30 a.m. Eastern. And when we're looking at bullish market structure on gold, besides drawing a trend line or any type of line on the chart, if I was to clear everything, what is the last price point of interest that we would need to break below to show bullish market structure is breaking on the intraday time frames here? Private chat, always ahead of the curve. It's 1772, okay? 1772 is the last price sensitivity area where we had a breakout into a high, a pullback, and buyers take us into these new highs. You would have to break below 1772 technically to see a shift in this bullish market structure. You can't just draw a trend line here and say, oh, structure is broken. It doesn't work that way. It's not based on lines on a chart. It's based on price points of interest, right? Because remember, the big market makers, the institutions, they're not entering based on a chart. They're entering based on price points of interest they have, right? Order flow. We observe that order flow as retail traders through the technical charting. So I would only be looking for gold sells and shifting out of my bias if we break below 1772. I would need to see extremely good economic data, like extremely strong jobless claims report, extremely strong manufacturing and business index report, and then also a break below 1772 for me to take sells. Otherwise, I haven't been playing any of these pullbacks. Any of these pullbacks, even though they're great intraday trades and even though they can run for hundreds of pips, I don't play the pullbacks. I play with the trend. I let the pullbacks complete and I jump back in with the trend. Anybody who watches me or you've been watching any of my streams, any of the analysis I do, you guys know that. Even when GJ is in pullback phases, I'll scalp some potential sells, but we always still wait for the potential shift back in structure unless fundamentally otherwise, for example, what we're talking about here, right? So those are the trade ideas on gold. Let me just draw it out for you guys to make it even easier again. Whatever happens here, I'm not touching this range between 1789 and 1781. This is a no-touch zone. From here to here is a no-touch zone, right? But if data is extremely bad, we break and retest above 1789 and 1795. Green box are buy areas. I would only be selling below 1772. I would have to validate a break out of the bullish market structure, buyers exhaustion, and sellers taking control, not just the pullback phase. Okay, so we're only 10 minutes into New York market open. We have about 20 minutes until that economic data. We're going to be watching that release here. Now, sorry, I accidentally hit the mute button. Now, with this economic data, the reason why I'm saying it can be a bit more lackluster or indecisive is because it's not out of the ordinary to see initial jobless claims as it's been trending down here to have some offset reports. Okay, so if you come here, this is just a chart laying out the US initial jobless claims. Obviously, you can see here, you had this massive spike in jobless claims when the pandemic first hit the scene because you had global lockdowns, especially in the US. I don't think my volume's too low. I think you're too broke. Probably trading off some old Macintosh PC, Windows XP 93, using some old 1990 Logitech speakers still wired connected. Put your volume up, man. But anyways, what I want to show you guys, this is like a 2-year chart. I want to show you guys more in the 6-month. You see, even the 1 year. You see with how jobless claims overall has been trending to the downside, right? Which means it's been improving since the initial part of the pandemic. You do have these off reports, which can give you these spikes and short-term uncertainty. For example, here, and even potentially here, we can see that. Right? Someone said old black and white Nokia. Damn, that was a good one too. I should have said that. This guy's on his Motorola Razr phone. You guys remember the Razrs? The Razr phones? Those used to be the shit. The Motorola Razrs? Those used to be trending. Anyways. So this jobless claims report, we've seen extremely strong rebounding reports in the job sector. So I wouldn't be surprised if we have a little bit of a decline here and an offsetting, not as oppressive report. But we're going to be watching that release accordingly in 18 more minutes. Okay, so we're pretty much going to be focusing on this section here. And because we have economic data from 2 various sectors, like here is more of a business index survey, which still holds equal weighting. And here is more data from obviously the job sector in the US. We can see some whipsaws. So you don't want to enter right at news, and you don't want to enter the first few minutes into news when those whipsaws are happening, because if you're a scalper, it can really fuck up your account, right? So you want to digest the data, understand it, watch the technical impact, and then adapt accordingly when more volume comes in, the new 4-hour candle in NYSE. All right. So anyways, that is, what did I just give analysis for so far? GJ and gold, right? I didn't do GU yet, did I? Did I do GU too? Or no? Yeah, we're still in a dollar bullish bias here, but it's going to be dependent on the economic data release in 17 minutes. So obviously we've been in a dollar bullish bias. If you guys watched the last market update webinar, Japanese yen bullish bias and volatility index bullish bias, but dollar movement's going to be dependent on the 8:30 release. Okay, I didn't do GU yet. Okay. Now, GU, let me zoom out. We'll just go over the higher time frames here first. Now, GU, similar idea. It's a risk currency against a safe haven pair. GBP is the primary, US dollar is the secondary, but the US dollar in this pair holds a lot more weight. What I mean by that is anything that's impacting the dollar or more aggressive dollar movement is going to take over in Euro USD or GBP USD or even UCAD, okay? It's a lot stronger than its other risk currency counterparts because it's the world's reserve business currency, the US dollar. Majority of global import and export is still done in the US dollar. Majority of bank-to-bank transactions are still in the US dollar. Oil is still within the petrodollar, the US dollar, right? So it has that strength on the global main stage and usually outpowers any currency that it's against within the pairs, okay? And you can also see on the short term, just like our other safe haven currencies like the yen or the fear indicator volatility index, dollar has been a lot more bullish. And when I come to the dollar standalone here, it's digging into these previous highs from April, okay? So having a pretty strong bullish stretch here, breaking above these price sensitivity area highs from July and also digging into these highs from April. So now we have to be cautious because the catalyst to break these highs is going to be the economic data at 8:30. We're going to need to see stronger labor market data to continue up here on the US dollar. And why I say that is any strong rebounding labor market reports has been pushing the dollar up. For example, this was unemployment rate. This was NFP stuff. This was JOLTS job claims. And then obviously we just had this upside move since. Okay? So we're still in a dollar bullish confluence. I'm still in a bullish bias on the dollar, but we have to be cautious as the area we are reacting to right now is that previous high that we haven't broken above since April. Okay? And it's going to be dependent on the data. So if we were to get a pullback from here, I would not be surprised depending on the economic data as well. But in the short term, we've been playing this bullish bias accordingly. Okay? The reason why wait, what are you talking about? But anyways, so that's what we're playing there, is that potential dollar strength, but we're waiting for that economic data release. So on GBP/USD, we have been primarily playing sells from either the key level 378 as well as 374. Now when we're looking at GBP/USD and current price points, I would only see sells if either we get a pullback to 374 or if we now break below 365. And even if we break below 365, we still have a solid 50 pip range to these previous lows. Okay? So either we have continued strength in the US dollar, break below 365, and we target these previous lows 50 pips down, or we get a pullback to retest 1.374 and take those sells down. Okay? I would only be looking for GBP/USD buys if we were to break out of this bearish structure, have dollar weakness, and come above 1.378. Otherwise, similar to GJ, within the private channel, and even the analysis I gave for free in the last market update webinar, we've been talking about that US dollar strength. We've been talking about that Japanese yen strength. We've been talking about that potential decline on the equity markets as well. You know what I mean? Which is still valid across the board here in various regions. Okay? So that's what I'm looking for on GU, more just adapting to the hourly time frames. It's either we're going to take the sells below 365 or wait for a pullback to 374. Now, Euro USD, similar idea here to GBP USD, where you can see on the higher time frames the structure is very similar, as you have a risk currency against a safe haven pair. And if we have that dollar strength, we do have the potential to dig into these lows a bit deeper to the 1.6 region. We have to be very cautious at this price sensitivity area, but we are remaining below that previous low with the potential to dig and fill this range further here. Right? So when we're looking at the price action, this is obviously going to be dependent on the economic data. But I'm either looking for two things on Euro USD. Pullback to 1.74 sells, break below 1.685 sells, want to target 1.63. Sell area, break below sell area, break below sell area. I would only be looking for buys on Euro USD, very similar to GBP USD, if we break out of this bearish market structure and come above 1.178, and US dollar is extremely, extremely bearish from the economic data. If US dollar rejects those previous highs we're looking at, and the economic data weakens the dollar, and we come above 1.78, then I'll obviously look for some potential buys. But other than that, we're just continuing to play the bearish market structure and dollar strength. We just let the pullbacks happen. As the pullbacks complete, jump back in the sells or wait for the break of low sells. Okay? Do I face losses in trading? What kind of dumbass question is that? This is fucking people, man. No, I'm perfect. That's why I'm here. I never lost, so that's why I'm doing a YouTube stream. I'm a billionaire. come on, man. You guys are fucking... Some of you guys need to go watch the Capital Hungry webinars in the YouTube. Not even join the private chat. I'm not even telling you to join the private chat. Because someone asking a question like that, I wouldn't even want you to join the private chat. Go click the channel button here and go dive into the content. Alright? Go watch the Realistic Expectations webinar. I'm being serious. There's like, it'll really teach you a lot and get you out of this shitty mindset. Because a lot of people have a shitty mindset towards trading that comes from social media, right? These huge win rate percentages, people only winning all the time and only showing winning trades, people never showing analysis or the process, making it seem so easy. So really go watch this webinar here. False expectations for new traders. It'll really give you a reset and a better approach. Okay? Primarily, that's a very good question, Ilyas. Primarily, investors as well as the central bank in terms of US economic data have only been focused in terms of watching the labor market. Okay? So let me explain that. That's a good question. But anyways, go watch these webinars, man. You have hour-long trading sessions. You have quick YouTube shorts that'll probably teach you more than your mentor did in 50 seconds. I swear, I'm not even lying right now. This will teach you more than Q Banks, Daniel Savage, Lambo Raul, fucking Anthony's World, fucking every other man with a Lamborghini in his with a rented Lamborghini in his shit. This will teach you more in 50 seconds than their entire course. I promise you all of this. Even like the GJ sells and gold buys, I even posted a 1-minute snippet 2 days ago and then a free analysis 2 days ago about talking about these trades that happened today, that played out today. Remember I told you guys, hey, this market update, you guys can use this analysis for the rest of the week. This is what we can potentially see happening. Like, you guys had this, you know what I mean? 2,000 people took advantage of that. Like GJ Sales I was talking about for days ago now. Gold buys I've been talking about for a week. You know what I mean? Dollar up, all this stuff. Dollar up, week. Since the shift in market sentiment, you know? I even got stuff to just motivate you guys because, you know, a lot of you guys are down bad nowadays. Men and boys nowadays are down bad. Just simping too hard and don't have any more belief in the supercomputer within their 2 ears. You guys got a supercomputer within your 2 ears and you're just polluting it. Just jerking your dick off every day. Hey, but to each their own. Everybody can do what they want with their life. I'm not here to, you know, be a dictator. But anyways, Ilyas, you asked a good question, alright? Ilyas said, hey, even with the poor economic data, why has dollar still been pushing up? That was also a confusion to us. But then we realized that with the potential economic recovery to come in the US, the Federal Reserve and investors, the only thing they give a shit about right now is extremely strong rebounding data in the labor market, right? So even with this data report here that we have coming up in 6 more minutes that we're going to watch, the more important one is the initial jobless claims. Because what the Federal Reserve is looking at and what investors and economists are looking at is, don't worry about everything else, like retail sales. Don't worry about the inflation. Don't worry about everything else. Why? Because as soon as jobs rebound and everybody's back to work full force, everything else will follow suit, right? Everything starts with people going back to work and people actively working in an economy. People working is like the lifeblood, the engine of the economy. Without it, you don't have anything else. You don't have the retail sales. You don't have the other industries moving. You don't even have a business index without people working because there's no businesses. Right? So you have to understand that the Federal Reserve, for them to start tapering off the stimulus, for them to start raising interest rates, for them to start remove it, for them to start reversing quantitative easing, what they have been focusing on. And if you look at what Jerome Powell says, even if you come here, I'll show you guys what Kashkari said. He's a Federal Reserve speaker as well. He said timing of taper. This is a Federal Reserve speaker, August 17th, 4:25 p.m. Eastern. If you guys can see this here. He said timing of the taper will depend on progress in the labor market. Okay? So the Federal Reserve and economists, what they are looking at is primarily rebounding in the labor market, and they want to see that rebounding month over month. They want to see NFP continue to be good. They want to see unemployment data continue to be good. They want to see initial jobless claims continue to be good. Because from an economist standpoint, they know that once people are back to work at full force, there's no more lockdowns and more people are vaccinated, that everything else in terms of economic activity will naturally follow suit. When people are getting paid more and working more, then when they get paid, they're going to take that money and go buy goods and services to sustain their life. They're going to go pay their bills. They're going to go to the retail stores. They're going to go do more online shopping. Then obviously retail sales and those other figures start to increase. Then obviously inflation figures start to level off. Overall economic activity starts to go up, right? But it primarily starts with the people working first. Without that, there's really nothing. You know what I mean? You can't just keep handing people checks and stimulus checks and expect the economy to run. It just wouldn't work. It would eventually collapse if you just kept handing out stimulus checks to people, you know? Does that make sense to everybody? So the Federal Reserve, for them to look at raising interest rates to taper off the stimulus support, they need to see month-over-month progress in the U.S. labor market. They understand after that, everything else will rebound after that. Okay? So that's why we're going to be mainly focusing on initial jobless claims, but this data does still have impact and can cause some potential short-term whipsaws in price action and so forth. Okay? So we're going to be watching that in a few minutes. You can see the Federal Reserve speakers, whether it's Jerome Powell or Kashkari, they've been talking about that. He also talked shit about Bitcoin a minute after that. He says he doesn't see any legitimate use case for Bitcoin. So me and him are on the same page. Me and the Feds are on the same page. But that was August 17th. This is updated news now. Biden says he will receive a coronavirus booster shot. So Biden's about to die soon. 15 more minutes. Imagine he fucking dies, gets the booster shot. Yo, if Biden dies from a vaccine, fuck, that's gonna have major market impact. Freaking stock market would drop. Fear would go up. If Biden dies from a booster shot or something, just fucking collapses there. Doesn't wake up. Oh man, gold will go back up. Dollar, fuck, it'd be funny. Anyways. Okay, so we have a couple more minutes. We're going to watch that data. GJ so far at New York session did a downside drop, but didn't give us good sell confirms. We're still waiting for the economic data. We're going to be watching these price points of interest. Actually, we just had a pretty strong rejection at the previous low here. I'm still in a sell bias below 150.200 though. Any pullbacks to 150.200 and fail to break above, sorry, we're still selling. We're still selling below these lows. I would only be looking for GJ buys at this point if we came above these wicks here and the previous low areas. Otherwise, selling in these areas. If the US president died, the US dollar would gain strength as a safe haven currency. The US stock market would drop though. All right, gold. Gold looks like it just did a bit of a liquidity grab prior. So we're going to be seeing if we get that economic data breaks above 1789 on the 1 minute for buys on gold. I'd be looking for buys not just above 1789, but exactly on the 1 minute above 1790. Above these 1 minute highs, that data just got released. Jobless claims had a very strong improvement, so we don't want to jump into gold buys right now. We might actually see a rejection here and then a drop on gold. Jobless claims is still improving here. So let the data do its thing. If it does any whipsaws, we're only going to buy if it breaks above 1790 clearly. The continued jobless claims is higher than prior, higher than expectations. This one had a nice drop below prior, drop below the expectations. So this is better jobs data, less jobless claims, which is a good thing. So we don't want to start jumping in gold buys right now. Okay? We might actually even get some high risk sell scalps if we don't break 1790, but let's just be patient. Let the dust settle here. Because that jobless claims data is still good. I want to see the impact on the dollar. Not much of an impact at all right now. So right now, so far, not too much of an economic impact from that jobs data, which is okay. Not too much of an impact. We're going to let the dust settle and still wait for those same trade ideas. We're going to adapt to sells actually if we do break below 1781 as that data is stronger, and the safer buys are above 1795. No, yeah, both this data here is good. All good jobless claims data. So we have a potential whipsaw here. All right? Jobless claims is good. Good data here, bad data here. So it can cause a bit of ranging on the dollar, some indecision. The jobs data holds a bit more value, like I was telling you guys why, but you can see a heavy drop in the business index here. Below the pole, below the prior. So this can cause a little bit of indecision and whipsaw ranging, so we're not going to jump into anything right now. We're going to wait for better confirms after the new 4-hour candle going into NYSE. And we're going to finish doing analysis on USD CAD and US 30 first, all right? So this is what I meant. This is what I did not want to see. I wanted to see this also be rebounded. If this business index report was rebounded and the jobless claims was good, which it was, then we would have saw a more aggressive downside move on the dollar to potentially take sells below 1781. But we can see we have some conflicting economic data here. So on the lower time frame, even though we didn't have much of an impact, we're just sort of ranging up and down here. Nothing too crazy for the time being yet. Let's look at GJ here. GJ price action still nice and bearish. Safer sells is going to be if we come below 149.8. We're going to take that 30 pips down to 0.500. I'm liking the rejections here so far at 150 as well. But I'd much rather clear these lows now after having this rejection here. After having this rejection at the previous low, I'd much rather break that and continue the sells. Or get the double top at 150.2 sells, as stated. GBP USD, we're going to be waiting for the key level alert. How come it's not here? Let me turn the sound off for you guys, so it doesn't kill your guys' ears. That sound is off, so you guys can't talk shit. If the sound somehow goes off, you guys can't talk shit, all right? Okay, UCAD and Capital Hungary. Last night we were in a buyer bias from 1.264 and 1.27 key level. We're trying to target these previous intraday highs, which we pretty much got close to in terms of the candle body target. What was that? What was that alert that just came? Oh, 1789 on gold. We're only going to be taking buys on gold above 1795 safely. So let it do its thing. No FOMO, no rushing, no impatience, no emotional decisions. We're only following our pre-planned trade ideas, all right? But anyways, for UCAD, I'm either only looking for buys if we do get a pullback and retest to 1.27 now, or if we break above 1.28 flat. Right here. 1.28. We had some nice buys play out overnight using that dollar strength to our advantage from 2.6, break above those highs, break above the key level as well. And then, yeah. Actually, I was in the CH private channel for a month. The first 15 days, I was doing good. And then I was looking to be rich in one day, in one trade. That's like... Bro, I love your honesty there, because that's so true. Nobody else would say that. I wanted to be rich in one day and in one trade. And then I blew it all in one trade. Besides the... Yeah, that's not following capital hungry concepts. Will I accept if I want to rejoin your group? What? Will I accept you? Any old capital hungry members can come back whenever they want, but I advise brushing up on your English a little bit first. Use a translator or something, just a little bit, in case we have some language barrier issues there. You guys got to understand, capital hungry private channel, or even like the free community, there's people from all around the world, right? Different time zones, different religions, cultures, languages. So sometimes there's a lot of miscommunications, and people already think I'm a mean asshole too. You know what I mean? People already think I'm a mean asshole. So I think I'm a nice person. I don't know, man. I thought I was a nice guy. But it is what it is. So yeah, on UCAD, I'm only looking for buys at a pullback to 1.27. I'm not trying to buy from the highs here unless we break out above this previous rejection area. Then I'd have safer confirms of more buyers momentum and order flow if we can clear that price point. Otherwise, I don't want to guess that we're going to break above here and jump in, and then we end up doing that pullback. You know what I mean? That is called Epic Pen. This tool that I use, like to draw all the squares and arrows, that is sometimes black out the screen. That is called Epic Pen. It's just like a Windows. You can download it just for your Windows, probably on any PC, but yeah, sometimes the drawing on TradingView gets annoying, like clearing stuff, and you know what I mean? This is just quick, like over top of your screen, just to quickly draw stuff. Okay, yo, pretty hard rejection here at 1790. If we get more bearish candles and get these rejections, it could show us that more optimism from the jobs data, and then we just need the breaks below the consolidation zone. Or we're only taking buys above 1795 at this point. Okay. What the hell just happened to my audio? Hello, hello. Audio's still good, right? XSplit says my audio is off, but I think it's on. This broadcaster's so shit. I gotta get used to using OBS or what these professional streamers use. Okay, still good? Alright, we're good. Okay, cool. Streamlabs? Yeah. Alright. Okay, so let's just be patient now. It's 8:40 a.m. Eastern. We have the 4-hour candles closing. We have the 4-hour candles closing in roughly 20 minutes. And we're still gonna be at the charts through NYSE volume as well. Alright? So no rush. I just gotta go to the washroom quickly. I'm gonna be a couple of minutes, and then we're gonna be waiting for those trade ideas I just given. We're gonna be waiting for those trade ideas given, and also I'm gonna be answering any questions, any charts you want to send. Just give me about 2 minutes here to go to the washroom. I'll be right back. And then when I come back, we're gonna do US 30 analysis. Yeah, I've been on my workout tip, eating a lot and drinking a lot of water, so you know what I mean? Shit just runs through my system. Alright, so we're gonna be patiently waiting for those trade ideas. No rush, no fear of missing out, No emotional decisions. We already have our pre-planned trade ideas. We're going to wait for those execution points, and we're still going to be watching the new 4-hour candle as well as NYSE volume and continuing on our session, right? If you guys enjoy these streams, make sure to like and subscribe, share it around in other trading communities. Anybody in Daniel Savage's chat, just send these streams in there instead, you know? Actually, he probably doesn't even have a chat function because like people will just talk shit about it with the messages, but whatever. All right, I'm back. Okay, GG did the pullback here to 150.200. Let's watch the reactions at the 0.200 in terms of the price action to see if we get some further rejection signs in this area. I would still only be taking buys above 150.5. We could prop up a bit more here, then have these rejection confirms. The safer sells still below 149.8. Yeah. Headlines. U.S. 10-year Treasury yields little change. Yeah, the economic data did not have too much of an impact on the dollar or the markets overall, as it was a bit of conflicting report there. You can see we had that pullback. If any, I bet somebody for sure jumped in a sell scalp over here at 1789, 100%. After that rejection there, 100%. But I didn't call that out. I sort of did, but not a pre-planned trade idea. So now we play the waiting game and we play the patience game, as we've already done our trade ideas, okay? We've already laid out our trade ideas. For anybody who wants to see those trade ideas, you can always just rewind this stream. Now we're going to be answering questions within the YouTube chat and Zoom chat, as well as looking at people's charts until we get potential trades to execute on. So if you guys want to send any charts, if you guys want to ask any questions, now's the time, as we're going to be playing the waiting game for those trade ideas and waiting for NYSE volume. So I'm here chilling. I'm here chilling now. For GJ buys above for GJ, is it valid if we close above 150.15 to daily retest support at 150.5? We would have to come above 0.200s area for me. Like, yes, this is good rejection and exhaustion from these new lows at 149.8, right? But you don't want to get caught in something like this. Right? Or something like this, where you're getting some rejection signs, or something like this, where it looks like you're creating a support and rejection signs, but you still maintain that overall bearish market structure. So with this being the last previous low, having this pullback phase and drop from there, even if we were to get a deeper pullback to 150.500, we would still be bearish on the intraday time frames, retesting that previous low, right? So that's why when I'm looking at the market structure and I'm looking at how from this low point we had a pretty aggressive pullback, sellers jump back in and take us into new lows. For me to see even a chance of buys, I would need to come above 150.500. When I'm zooming out, I don't want you guys to start trying to call out a bottom and we don't have a shift in structure and you get caught in something like this where a support's being made, or something like this where it looks like support's being made. You know what I mean? And even here, when you had a support being made, the pullback, it ran, but it's very short-lived. Do you understand what I'm saying? So it's very similar here too. Just because we had a low printed and a bit of exhaustion and a technical support being made doesn't mean that we're going to have buyers just jump in and completely break the structure. We could have a pullback, yes, from like 0.200 to 0.500, but if we don't break this overall structure right now, they're starting to get created. We're still going to be continuing our way down bearish, just like you see these pullbacks get faded out here. It looked like support being made, faded out here, faded out as well. Right? Okay, so that question was answered there. What else did you guys? Let me check the YouTube section. What do you think of gold for the next 3 months? You should check out the gold analysis or the US dollar analysis and the market updates on the YouTube channel, where I go into some more higher time frame. When data confusion, people get back to technicals. It's just conflicting reports, just ranging. It's not like anything serious. Any thoughts on COT reports, the COT reports? I used to use the COT reports for more higher time frame bias and macro order flow before the pandemic. Once the pandemic really hit the scene, we were just following central bank actions as well as market sentiment on optimism or fear. What do I think about Euro JPY? Exact same bias as GBPJPY, bearish. We can see that very similar to UK equity markets. German equity markets in Eurozone are also having a decline from their highs, showing less investor confidence within the Eurozone markets for the time being. And Japanese yen and dollar have been holding more individual strength as safe haven currencies. So Euro JPY has been in more bearish structure. I don't even got to look at it. I know it's bearish. And it's going to be doing pullbacks and dropping. You know what I mean? So if I go to Euro JPY here, it's probably going to be the exact same as GJ. Yeah. Bearish, right? Even if Euro JPY comes up to, yo, these PPLs on EJ slapping. Wait a second. The PPL indicator on EJ as well? 0.500, 0.800, 0.200, flat 0, 0. Wait, guys, we might need to start throwing EJ in the mix. PPLs are slapping over here. The PPL indicator is slapping on EJ. Look at these. Look at these drops over here, stuff from like, that's 0.300, still 0.200 right there. But anyways, Euro JPY, very similar structure to GJ, AUD JPY, CAD JPY, same shit. They're all the same shit. Okay. Let me scroll up. But yeah, I have not used any COT reports since the pandemic. Does the private channel get webinars like this daily? Yeah, we do daily live trading sessions, market update webinars. You get access to the newsroom, key level price alerts, the community, other members sharing their analysis, the live trade room. Yeah. Tell them, can you guys tell them, chat, tell them how much shit we do. All right, while I answer these questions. Someone wants to know what we do in the private channel. More dollar strength equal weakness in GPY equal GJ buys. Hardick, you're a retard. Yo, tell them, man. This guy said we flex Lambos. Please, where can we get market knowledge like you? Knowledge where the point we can relate to the new market. What the fuck, man? Giving me a stroke here, Mr. Clyde. Knowledge where the point we can relate the new to the market condition. Oh fuck, man, this shit gave me a headache. You could just watch like all the stuff on my YouTube channel and probably learn a shit ton, you know what I mean? The YouTube channel has hundreds and hundreds and hundreds and hundreds and hundreds and hundreds and hundreds of webinars. Probably not actually hundreds and hundreds, but at least 100 now, I think. So like you don't have to join the Capital Hungry private channel. You can learn so much from here. If you want to really level up, you can join the private channel where we do a lot more. It's a lot more intuitive and interactive. But even on the Capital Hungry YouTube page and the free Telegram analysis channel, you can learn a lot, you know what I mean? So that's a good place to start if you want to learn to get market knowledge like me. All right, what else we got? What other questions? Oh yeah, US 30 analysis. Okay, we're about to do that. What is your analysis for GBP AUD? I did not do any analysis on GBP AUD, but if you want to send a chart, I'll check it out. Did somebody else sent a chart? I forgot. Roman here. Sorry, Mr. Roman. Trading view. What I gotta do? An X or just chart now? Or is it the X thing still? Oh, this guy already got the X. Okay. GBP USD. Looking for sells at the retest of resistance, and also yes, Roman, if you rewind this webinar when I was doing GBP USD analysis, we are in a exact same similar bias. Okay, I got the same bias as you. I agree. I'm looking for more US dollar strength still. GBP USD and bearish structure here. I was either looking for a deeper retest to 1.372 sells or the break below 365 sells. We've already had some pretty aggressive moves prior days and over London session, so if New York ranges, I wouldn't be surprised, but we will get some better volatility obviously with the NYSE volume. New York session so far, like the NY Open, pretty stagnant and shit, but hopefully NYSE volume in about 35 minutes after these new 4-hour candles set up, we'll get some continuation. Do you think dollar can continue to strengthen if tapering comes this year end? Yeah, that would be fuck Vikram. This is what happens, Vikram, when you go from the market fluidity stream, then you come here. You guys are saying it in reverse. Dollar, if they taper and raise interest rates, dollar will go up. It's a guarantee. It's not, do I think dollar will strengthen if tapering comes this year? That's what happens when you guys be jumping 10 streams. You missed my question about GBPJPY. What was it? Where? Can you ask it again? Oh, do you think if we break the 30-minute 1-hour wick to the left around 150.33, we can see a buy to 0.500? Yes, that's possible. If we break these wicks to the left, you can buy to 0.500. But honestly, Jane, that's not really a good favorable range for me to like out of the trend we're seeing right now in bearish price action. For me to like try to squeeze a buy from 0.35 to 1 to 0.5, like that 15 pips, trying to squeeze it against the bearish price action right now, wouldn't be like a favorable risk versus reward. Like, for example, where would you put your stop loss for that, and how big would your stop loss be? Because if you have like a 10 pip stop loss and a 15 pip take profit, it's not really like a high probability good risk versus reward to have. I'd rather get at least a minimum of 1 to 2 or 1 to 3 RR. What do you think about Euro USD hitting the lowest lows since last November? I don't think anything about about it. We just sold it when we could. I don't really have I don't have any personal bias or attachment to any currency pair, chart, whatever it may be. You know what I mean? Bitcoin, crypto, like I just trade stuff as objectively as I can. I'm just here to try to stay as emotionally neutral as possible, understand technicals, fundamentals, keep increasing my experience and sharpening my tools, and get money out of the market. Sorry, SMA, last time. This man's been asking for the US 30 analysis, and we forgot to do that anyways. Okay, now, US 30 for the gang. US 30, ever since the pandemic crash, has been only doing two things. Pushing to the upside with the support of the central bank and the flood of US dollars going into the stock market, as well as smart money and investors riding that wave with the whales, doing pullback phases and continuations up, or doing consolidations and breakouts to the upside, pullbacks and continuations up. When you look at simple bullish market structure, this is all you see on Dow Jones, okay? But every time you have some short-term fear, uncertainty, or doubt, and majority of the time it's at a high or a previous high or a new high created, you can see that we have these very aggressive pullback plays. These pullback plays that happen are not breaking bullish market structure, and they're not causing any mass panic fear or any uncertainty or doubt on the long term, but it is simply anytime we get short-term fear, uncertainty, or doubt at these highs, you see profit taking by buyers, sellers jump in accordingly to relieve those buyers out of the market, and then push price down to a more favorable demanded price point before buyers jump back in with the trend and take you back to those highs. This is also the same structure I've shown you guys on GJ maybe like, I don't know, 1,000 times. Right? So with US 30, all I'm trying to do right now is identify the dip. Like we called this dip coming on US 30, I think like in the last market update webinar. But we were not selling the US 30 dip. I personally do not sell US 30. I do not sell the stock market. Stocks only go up. As long as the US dollar is still being heavily oversupplied in the short term, or the Fed is still keeping stimulus active and keeping interest rates cut, stocks only go up, all right? Yes, you have these pullback phases. If you want to be a counter trend trader and play the pullback phases, by all means, go bust a nut over the shit. I don't care. You know what I mean? But I'm just telling you guys, I let the pullbacks complete, wait for the breaks of the pullback structure, and ride the buys back up to the previous highs as a target and potentially higher. So on US 30 here, all I'm doing is going to be waiting for this dip to complete, maybe potentially come down to 34K, wait for the break back above the bearish structure intraday, and then take the buys back up to the highs. This is what I'm waiting for. All right. That's all you see. Even when you zoom in more here, that's all you see from these high points. New high printed, profit taking by buyers at the high, sellers jump in, creates this pullback structure. High printed, pullback structure. High printed, pullback structure. As soon as that dip is complete and doesn't break overall bullish market structure, this might come down to like 34,400. I would wait for that shift out of structure, which you can identify like on the lower time frames. For example, like here, I'll show you guys more on the hourly time frame. Let me show you guys here. So for example, from the high, you would just identify that pullback structure. From here, identify the pullback structure. From here, pullback structure. As soon as you find a base, you don't have to enter at the lows. You don't have to try to guess the bottom. But as soon as you break out of that structure, buys back to the highs. Buys back to the highs. Even if you miss the dip, come back above 35K, buys back up 600 points. All right? With fundamentally, you have to understand this market crash here. It was not unknown. This was a price setup. This was transfer of wealth. This was setting up a fire sale and setting up a sale for the wealthy. As soon as we hit this 18K price point, you literally saw that they hit the circuit breaker, did not allow any more short selling of the stock market. The Federal Reserve jumped in and increased the US money supply and then started flooding the stock market, and investors, corporations, smart money, they ride with the support of the central bank. If you were in buys from here, 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 or whatever it may be, why would you want this greed train of gains to stop? So yes, we're getting some profit taking and short-term fear from these highs, but unless we were to really break below 32,000 here, the US 30 is extremely bullish. You know what I mean? This pullback's really probably going to go to like maybe 34K, double bottom here, and then continue back up bullish. All right? So if you guys want, when you're looking at US 30, if we have a pullback to this order block low around 34,800 and fail to break, high risk, high reward sells. And also if we break below 34,600 today, I'd still be looking to play that pullback if you guys want to play the pullback. I personally wait for the pullbacks to complete and then jump back in with the trend to at least target the previous highs and potentially higher. All right. Gold is just ranging on the 1 minute. No entries on gold. No FOMO shit. No emotional decisions. GJ, no clean entries yet. We were almost close to a double top sell at 0.200, but we didn't tap it yet. So we're still going to be waiting to see if we can break below 0.800. GBP USD below 365. Euro USD, we're going to sell below 1.685 or retest of 1.17. UCAD, we're buying above 278 and 28 area or the retest of 27. Yeah, an order block is just my description of a consolidation zone. People have, you know how people can say shit like, you know what I mean? A consolidation zone that you can identify on whatever time frame. I just say, I name it as an order block. Consolidation zone, liquidity block, or whatever you want to call it. You know what I mean? Jeeve, I look like you? Okay. What do you want me to reply to that? NAS 100 is pretty much the exact S&P, NAS and US 30 in simple terms is pretty much the exact same market structure. Yes. Same fundamental impacts, same market structure. Not the exact same lower time frame price movements on the dot, but in terms of intraday market structure, higher time frame structure, and fundamental impact, US 30, S&P, NASDAQ, all same shit. They're all just US equities, you know? I was really hoping for a nice tap at 0.200 for the high risk sells we were talking about. We would have already got 20 pips here. But let's see if we can even break below 150 here to continue down to 149.8. But that's probably going to come with NYSE volume. And this is looking like a little bit of slow bearish price action. So I'd like to see some more price action similar to this if we do break below 150.8. But still in a GJ sell bias. What is the biggest loss I've experienced in trading, either at one time or overall my first 2 years? I probably lost 50K in the markets 2016, 2017 times while I was working at the bank when I didn't know shit. I didn't have a trading plan. I was just trying to like flip accounts, like just deposit every freaking day. Every bi-weekly paycheck would just get dumped into an account, burn it, try to trade news and all this stupid shit, follow signals, follow all these strategies, indicators. So my first 2 years were just pure trial and error, burning money. So that's probably like the biggest loss, was that collection of losses. Because I never really, when I first started, like deposited a large amount into an account, which I wish I did. I wish when I first started that I saved a substantial amount, like 10, 20K, and then deposit that at one time. I feel I would have been much smarter with that than depositing a bunch of $100 and $500 accounts. It always felt like whenever I deposited $100 and $500, if I burned it or crashed it, I would validate to myself like, oh, don't worry, it's only $100, it's only $500. You know what I mean? So all that stuff really adds up, you know? Gold is breaking above 1790. Let's watch this accordingly. For new 4-hour candle is nice and bullish. We broke out of this potential corrective structure as well. I'm just waiting for NYSE because what I'd be looking for now at NYSE open, even if we come up a bit higher, is a pullback to 1790. Or again, safest buys is above 1795. We just patiently wait for that volume to come in. I'm liking this lower time frame structure that's developing here though. If we got a pullback to there. So if NYSE even if NYSE does a bit of a deeper pullback to here, then comes back above, I'd be looking for those buys. Or if we come above 1795. Let me looking at that. GJ, remember, these are the new 4-hour candles setting up here, so let it do its thing. We can see in relation to the price action, very bearish aggressive drop. But even if this 4-hour candle was to make a bit of a deeper upper wick and come back below our sensitivity sell areas, we're still very bearish, all right? So just let that 4-hour candle make its potential wicks and set up, and let's let NYSE volume come in about 20 more minutes. So far, we have not executed on any trades yet. There hasn't been anything to enter on yet. Unless you took like that gold scalp above 89 or 90 for quick, or unless you took this GJ sell earlier at 0.200 area. But other than that, so far through the New York trading session, it is a no entry, no trade day. We're going to see if we can hopefully get a trade in with the NYSE volume at those price points of interest. Sorry, I've just been reading about a lot of this stuff. Well, all this Afghanistan stuff is going on. Iran keeps developing their nuclear weapons further and further behind the scenes. So all this they keep enriching their uranium up further and further, which like the rest of the world does not want. France, Germany, UK against it. US is against it. Former US SEC chairman joined Fireblock. This is probably some investment firm. #1 institutional digital asset custody settlement place. You just go from job to job. This corporation to this government area to this place. No, nobody was looking for sells on gold. I don't know why you said no more sells on gold. I was in a gold bullish bias. Yeah, this would be ideal as well. You have a lot of EMAs and shit, but fucking looks messy, man. Looks like some noodles or something. But yeah, this is what we'd be looking for as well. Is that pullback and continuation back up. But no, nobody was, if you guys rewatch the analysis, I was primarily in a gold bullish bias. The economic data didn't have too much of an impact at all when we were looking at the lower time frame price action and the size of the candles and stuff there. There wasn't, there was mixed news. One report was very bad, one report was decent, and it didn't have too much of an impact overall on the dollar or on gold when we were watching the release. It like didn't even move like 20 pips. You know what I mean? If you guys rewind this stream and if you rewatch it, you'll see the gold analysis, GJ, and everything else we were talking about. You can even do that as we're talking now. You can just go rewatch it quickly, see the gold analysis. My main bias on gold was still buys. I just wasn't paying attention to call out the buys here because I was answering people's questions. So we're waiting for 17.95 or a pullback or continuation. GJ, I'm only buying above 150.500. Yeah, I can check out your chart. No, you did not miss the... Actually, yeah, you did miss the EU analysis, but you didn't miss it because you can just rewind the stream. I did GJ analysis, then gold, then GBPUSD, Euro USD, USD CAD in that order at the start of this stream. You have to remember, guys, we're manual retail traders. I'm getting a little bit annoyed, not by you guys or people in the Zoom chat, but just by people's approach to the markets. Some of you guys have no trading plan. Some of you guys have no analysis. You just like show up to the chart with your $200 account and just look for shit to take based on your feelings and based on like whatever the fuck you see happening in front of you. Like, oh, this looks good now. Maybe I'll jump in this. Oh, this looks alright. Maybe I'll jump in that. Like, it's a very poor gambling mentality. There's no structure. There's no business plan. There's no personal auditing, personal journaling, personal tracking. You know what I mean? There's no pre-planned analysis. There's no trade ideas. It's just all like a big mess for the 99% of people. And I can understand why people get tricked into that mindset towards the markets, as majority of people come to the markets through social media and they're told that trading is very easy, you can make so much money so fast. Look at me, I'm a bald fucking retard who does drugs all day and buys fast cars, and fucking look at me, I'm making so much money trading. It's like, no man, it's not true. You know? So a lot of people get these very false expectations from social media and from fake gurus and mentors, and then they just end up like bringing the most terrible behavior to trading, and all they do is end up developing an addiction to the charts and trading. They'll be trading for years, trading for months, burning accounts, never taking it seriously, never planning anything, never making any trading plans, a risk management plan, never looking at the probabilities, the number side of the game, always just making emotional decisions. You know? So you have to understand it's extremely toxic. Like for example, Raja's very disciplined with what he does, but have you guys seen Raja's live stream chat? Like he gets a shit ton of views. He's a great example to give with the audience he has, right? Raja gives great advice, great risk management tips, good scalping analysis, but have you seen his audience on YouTube? Have you seen his chat? Can you guys really honestly tell me that you think the majority of that chat is going to be successful or even be trading next month? That is like a retarded amount of dumb people. It's just a revolving door. People are going to be coming in and out of the industry non-stop. They're going to come in, they're going to try it, they're going to quit, more people are going to come in. You know what I mean? So what Raja does and the value he provides is great, but I'm talking about the audience of the people who are within the retail trading community. They're dumb as fuck. They're stupid as shit. They are some dumb, antsy, horny, fucking like hyena motherfuckers. They are straight hyenas, vultures. GJ buy, GJ sell, SPY, Bitcoin crashing, this going up. Like they'll be commenting shit that's not even relevant to what he's talking about. They'll be spamming other shit. They'll be talking about stupid shit. They'll be doing one thing 1 second, another thing, another. Please, guys, please. Trade. Please, anything to enter? Please, let me enter something. I need a trade, man. Give me the fucking trade, man. GJ buy, sell. Like a crackhead, man. You guys ever seen the Dave Chappelle crackhead skit? Come on, man. Give me the fucking hit, man. It's like fucked up, man. Gamblers. You're telling me these are level-headed, emotionally controlled people who are going to be making logical decisions? It's fucking, they can't even control their heart rate. They can't even control their breathing. They can't even not type stupid shit in the chat. They're fucked. It's fucked, man. They're crackheads. And I'm not talking about just Raja's audience. I'm talking about everybody, like in the YouTube audience community, in the retail trading community. Who do you think is signing up for people like Daniel Savage? You think competent, logical thinking people are signing up for Q Banks or Daniel Savage or Anthony's World or any of these marketers? You think these are competent people? You think these are people who are like, oh, okay, this guy's gonna teach me about trading. Let me wait, but about the financial markets, about economics, what the fuck? They're not. So you guys have to understand, within our retail trading community, the majority of people have been misled, miscommunicated to, and manipulated to that people don't lose, that you only win, that trading is all Lambos and glory and extremely easy, and it's all very childish, immature mindset. Like Q Banks, Daniel Savages, none of these guys are successful traders. They're successful salesmen. They're all marketers. They're salesmen. They're not traders, right? They're selling a dream and what's convenient. They're like mini versions of Grant Cardone or Ty Lopez. You guys know Ty Lopez or Grant Cardone or fucking Dan Locke? You guys ever seen these ads with those guys who just sell dreams or say work hard, get rich, buy my course and shit? And they just like, hey, look at me, look at my lifestyle, look at my private jet, look at my wealth, look at all this, look how cool I am, look how fun I am, look at the life I live. They are mini versions of them. Mini version of a Ty Lopez, of a Dan Locke, of a Grant Cardone. They're just marketing salesmen, and that's it. The same marketing tactics that are used by Grant Cardone or by Dan Locke or by Ty Lopez is the same marketing tactics used by these Forex fake gurus. Flash, distractions, lifestyle selling, and so forth, right? If you're really thinking about trading, which is the financial markets, right? Which is economics in a sense, math, probabilities, logic. It has nothing to do with fucking Lambos or being fast, easy money. It's the exact opposite of that. No, the fundamentals is not just the data. Fundamentals is not just economic data. Fundamentals is order flow, economic data, market sentiment, reactive headlines, and volatility, right? And also, we had mixed reports here. Good jobless claims, very shit Philadelphia Business Index, very poor data, surprisingly poor data. So we had an indecision there with the economic data. That's why gold is just ranging. That's why we didn't call any trades on gold at all yet. Gold has been going up and down ranging, right? That's why I said no entries on gold yet. No entries on GJ yet. We're not going to be fighting a ranging market stressing out. We're going to be waiting for our clear-cut confirms and entries, right? Fuck. You don't want to be like Daniel Savage. You see what Daniel Savage did last night? Let's read this shit. Let's read this shit. Did I send it to the Telegram chat? You guys want to read this as we're bored here? So Daniel Savage was trying to buy GJ all night last night, right? You guys can't read it. You're gonna have to join the free Telegram analysis chat. It's too blurry here. Fuck. But anyways, if you guys join the free Telegram analysis channel, I'll send a link in the. If you guys can go read it in there, but you guys can read this. So, anyways, he was trying to buy GJ all night, right? He was trying to buy GJ all night, 100 pips drawdown, whatever. But look at what he says. Every fundamental and every technical is bullish. All right, first of all, that's a lie, right? I hope this stays, guys, I'm transparent as fuck. I hope this stays between our group because we are family. I've been a whole last 4 weeks. We haven't lost. I'm down $27,000. I revenge traded. I fought with my future wife. She's jealous. This lifestyle brings drama. 20 to 40 girls hit me up a day. People are paying this man. You know how fucking stupid you have to be to pay this man to teach you about the financial markets? People are paying this man to learn about the financial markets. Someone who's in his early 20s, does drugs all the time, talking about 20 to 40 girls hitting him up with his fucking ugly bald head itself. Come on. Look like a straight gimp. You know what I mean? Like, come on, bro. You might, yeah, 20 to 40 escorts maybe that you contact. Let's be real, yeah. Maybe the girls you're paying at the strip club or the escorts you're paying for with your fucking signal money, but no other girls are hitting you up. You don't got game, bro. 861 people paying this guy $150 a month. You know what I mean? So this is what people follow. Look at Q Banks. Okay, you want to know Q Banks? Q Banks did the best marketing tactic. With Q Banks in-person classes, right? He used to give people a certificate. He used to give people a certificate of completion, a graduation. 127K a month. Not a year, a month. No analysis, no charts, no webinars, just signals. Q Banks had great marketing tactics. Q Banks, garbage ass trader, very smart marketer and business guy. All right, same thing, lifestyle shit, and also with his in-person courses. He used to do it in an actual classroom setting. Call himself like a professor. He called his course the Wall Street Academy, and also when somebody would pass his fake course, he would give them a grade and a certificate. This is called a reward system. This is like the same type of thing that you get in schooling, where it feels like what you learned is real because you just got rewarded for it. You just got validated for it. That certificate isn't worth fucking shit dick all. I could go make a certificate right now and say, hey, I just passed Wall Street Academy, and it has the same value as the piece of paper everybody else just got there. But it's a marketing tactic. You say, hey, look, you're at the Wall Street Academy. Look, you're in this classroom with other people. Look, there's a professor teaching it. Hey, look, you have to do this test. Oh, you passed the test. Here's your certificate. It's all a marketing tactic. It's a pathway you put these people on. They feel like they've accomplished something even though they got nothing at all. Even though what they learned was all for free on the internet. It was Fibonacci's. It was support and resistance in Fibonacci's. Right? It's a marketing tactic, a very smart marketing tactic. It gives people a sense of accomplishment. It gives people a sense of camaraderie, like they're a part of a group who was doing this. They're a part of a classroom, and it makes them feel like they achieved something. But in the reality of the value, it's worth nothing at all. Sean Lee, Amin, Can't Trade Worth Shit, all marketers. Sean Lee just makes a new scheme every time. Urza Capital. Oh, now it's this fucking Dawn Nightstar Algo. Now it's this Astro Accelerated. Now it's this Astro in-person courses. Now it's a new course. It's just fucking bullshit. It's rebranding. All these guys do is rebrand. Q Banks had the audacity to try to charge people $60K a month to be his friend. Like, that's fucked up, you know? And don't worry, guys. I know we're just roasting right now and joking around, but you have to understand, markets are slow. We're waiting for NYSE, and we're waiting for our trade ideas. To recap, we're waiting for either gold pullback at NYSE, then back above 1789, or safest 1795 buys. 60K a year. Oh, is it a year? My bad. Whatever, man. Somebody's salary. All right? So we're waiting for NYSE volume in 5 minutes. GJ, we're waiting for either sells below 149.8. I'm only taking buys above 0.500. Gold would only be sells below 1781, correct? GBPUSD sells below 365. Euro USD sells below 1.685. UCAD, we're taking buys above 278. US 30, we're letting the pullback happen on US 30. Dollar still bullish. Japanese yen still holding some bullish strength. Volatility index is still bullish for the time being. Just rejected that previous high. Equity market still on that short-term decline. New York Stock Exchange open 9:30 a.m. Eastern is when U.S. equities open. I just call it NYSE just to like, you know what I mean. But it's when U.S. equities open up. I just say NYSE open, you know, NYSE coming up. Yeah, the chart was empty. $17.81 and $17.72. 1772 is the safer one. All right. Yeah, we're just waiting for these trade ideas, so I'm just answering questions on technicals, fundamentals, news, charts, analysis, and so forth. Yeah, even if we come up to these highs, reject, then come back below 0.200, these sell ideas still make sense. And also if we break below 0.800. I like how you identified a potential pullback that could happen with NYSE to retest these highs and then reject and come back below. And this is exactly what I see with the safest sells if we wait below 0.800. Do I think US 30 pullback is over? No, I just see this as like a low printed consolidation zone for now. You know what I mean? US 30 could easily like still do something like this. This is a consolidation zone. Do something like this to 34,800 and still drop. I'm still more looking at this bearish market structure from the highs of the 35,600 highs printed. So just because you printed this low, I don't want to say that the US 30 drop is done. Especially if NYC spikes up first, then starts to break these lows. All right, okay. How will interest rates affect the market? Which interest rates are you talking about? US interest rate increases or cuts? Be more specific. Hey, Jeevan, what's the chances of the Fed will be tapering? The chances of the Fed tapering are getting higher and higher, and it's 100% dependent on the jobs market data in the US. If the US labor market continues to rebound, the potential for tapering by the end of the year or early into 2020 is very high. If the Federal Reserve tapers stimulus and increases interest rates, this would give strength to the US dollar. Yes. Where do I look to find euro strength just like dollar index? I don't look at any individual risk currency indexes. I only look at US dollar, even sometimes Swiss franc, Japanese yen, and the volatility index. Do I still do London sessions too? Only once in a while in the private chat if we do a double header. Are there differences? Are there differences in trading during different months? Yes, there are seasonal impacts to the market. What is your opinion on prop trading? Is that stuff like FTMO? In my opinion, I would first, before using anything like FTMO, I would first go through trading with your own money, even if it's a low amount, just to go through the process of attempting to develop your own capital. Okay, if after that, after you've practiced, after you've traded with your own capital and so forth, you want to go use some type of prop firm, as long as that prop firm is reliable and you will get paid out as you expect, then by all means go for it. I personally am an advocate for people trading their own hard-earned money and actively working a job, working 2 jobs if they need to save the disposable income, to be able to invest that disposable income into the market and have more of an emotional attachment to their own dollar and be a lot smarter with their own money and almost a lot more proud of developing their own money. That's my 2 cents. I've only ever traded my own money, and I'm going to stick to that path. But if people want to use a prop firm and it's reliable and you also have the experience and have at least traded yourself before, then go ahead, to each their own. No, I usually stream every Wednesdays. Okay, GJ, 30-minute candles are opening up here. We're not going to be taking buys above 0.200. We're just going to see if we get a pullback here, fail to break, and then come back below. Gold as well is doing a pullback to that lower time frame structure for the time being. So no entries still yet. And I really got to go to the washroom again. So NYC just opened up. Give it 5 minutes to let it cook. And then we're going to see if we can execute any trade ideas on gold, GJ, GPUSD, Euro USD, and USD CAD. Any questions that I didn't answer, just save it and send it again in the YouTube chat 5 minutes from now. I just got to go to the washroom again. If you guys, I've been getting too many gains. 1 second here, everybody. I'll be back in exactly 5 to 10 minutes. Yo, I'm gonna shit my pants. Nobody's taking a secret trade in the washroom, and price is not. I didn't say I'm gonna enter something or do analysis for 1786. GJ, we're letting it do its pullback and then come back below. It's only 3 minutes into NYC. You guys gotta calm the fuck down. Yeah, thank you, Mr. Clyde. All right, let me go. Let me go. Fucking shit, please. God damn. Yeah, what the fuck is secret trade? Like, I'm gonna go to the toilet. That's where I like to trade, on the toilet. Come on, use your fucking brain, man. It's called I gotta poo. All right, that's all it is. There's nothing deeper than that. I'll be back in 2 minutes. All right. Okay. Okay. Gold, we'll take buys if we come back above 1789, safer above 95. Same trade idea still. GJ did a hard rejection of 0.200 and some aggressive bearish candles. Already dropped almost 10, 15 pips below 0.200. High risk, high reward sell area. I already got my secret trade in the washroom. I'm done. GJ sells. No, I'm just kidding. I didn't take anything. I'm still waiting. It was a fast shit. I was trying to rush the shit because you guys were on my ass over here. You would think how you guys are on my ass that you were the shit. No, we're still GU we're waiting below 1.365. There hasn't been any entries through this. Normally during our live streams we get to take a nice scalp and entry, but hasn't been the best price action so far. We've had some nice GJ, like we had some very nice movement, it looked like, over London session. All right, so any questions? No, I didn't take any trades. I was only looking at those GJ sales at 0.200, or if we break below 150 now for some continued momentum. For anybody who's asking more technical questions about, like, you know what I mean, psychology, please, for fuck's sakes. Some guy said, "Are you married, sir?" No, bro, I'm not married. So I don't know why that's relevant. Okay? For anybody who's asking questions about entry confirms, 1 minute price action, so forth, scalping series. Okay? Anybody who's asking about, hey, Jeev, how'd you start out as a trader? All this blah, 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 blah. Psychology, you versus you, evolution of a trader. Even Raja was a guest in this one. Wicks Don't Lie was a guest in this one. Okay? Anybody who's asking about central banks, stock market, GJ, higher time frames, gold, stuff like that, fundamental principles, crude oil, central banking, greatest transfer of wealth, timeline of GJ higher time frame, gold higher time frame, fundamental principles and market climate. All right? For anybody who's asking about analysis on other pairs and how I do analysis, GJ, GU, gold, UCAD, Dow Jones, GCAD, Dow Jones, 0 JPY. Okay? For anybody who's asking about even more scalping tips, scalping part 3, live London session, scalping part 4. For anybody who's asking about, hey, more fundamentals, the next US recession talk, gold fundamental and technical analysis, GJ fundamental and technical analysis. More psychology webinars, normalizing losses in trading and focusing on probability. You got a webinar right there for that. Okay? For anybody who's asking about live trading streams, we have hundreds of live trading streams, 4 hours long, 2 hours long, 3 hours long. These ones were during London session. More fundamental and technical analysis between those. Market update webinars and intraday market update webinars. Rants about society, psychology, and so forth. Market update webinars, live stream webinars, society webinars, market update webinars, psychology webinars, analysis, fundamentals, technicals, the roast of Daniel Savage, personal development. Like, there's a shit ton of stuff here. So it's up to you guys if you want to take advantage of it, you know? Capital hungry Twitter. Capital hungry Twitter is better than Forex Factory News. Better than FX Live News. It's not as good as the news terminal, but still. Alright? Capital hungry free Telegram analysis channel as well. Why is a country like China lobbying for Afghanistan? Because China is going to be opening one of the largest copper mines in Afghanistan, and China is also very interested in that opium, very interested in that gold, very interested in that oil. It's the same reason why the US wanted to raid Afghanistan 20 years ago and have been raiding them since. China just wants more power. They're not lobbying Afghanistan to, like, support Afghanistan. They're lobbying to enslave Afghanistan. Yeah, lithium too. That's another one. Lithium. Yeah. Where was that? No, that's not it. No. Where was that Afghanistan post? There's too many pictures in this chat, man. I forgot where that Afghanistan post was. All right, so gold is breaking lower. Obviously, we didn't get our buy confirms, but we weren't messing with this range anyways, as we've been whipsawing since the economic data, up and down 30, 40 pips. GJ, we're getting too much exhaustion here. We're not going to be selling GJ right at 0.200 unless we get further confirms of rejection. You can see the 30-minute made a lower wick now, so we could get a bit of a deeper pullback before we have some further sells. So I'm going to wait for some more confirms here of 1-minute rejections. Otherwise, I'm going to let the deeper pullback happen and then wait for the better high-risk, high-reward sells. Yeah, pretty slow New York session today, guys. Very slow New York session. So far, today is a no trade day for us. No trade day so far. No wins, no losses, no nothing. Sometimes the best position in the market to have is no position at all. So today's a no trade day. I really wanted that gold and GJ trade ideas, but we're not having the clean cut conditions for it. We're not having clean cut price action. And the volume isn't that bad. Yeah, obviously this is just a pullback for equities. The PPL indicator just automatically maps out the PPLs on GJ. What was deep? Sometimes the best position in the market is no position? You never heard that before? That's an old saying. That's like one of those Wall Street sayings. Like, you know how they say bulls make money, bears make money, pigs get slaughtered? It's because pigs are gluttonous and greedy. So you can make money as a bear in the market, playing the sell sides when it's there. You can make money on the bull sides, playing the bullish trends and bullish structure. But if you're a greedy pig, you're going to get slaughtered 9 times out of 10. You know? That's why we're not being greedy or emotional here. Remember, guys, you don't have to trade every single day. If the conditions aren't clear, there's days where there's much cleaner conditions. And for example, like this has been New York session so far compared to London session moves, right? So we already had very strong movements on our GBP pairs over London session. We can't just have continued expectations of just dropping another 200 pips. The market moves in waves, right? You have your exhaustion phases, impulsive moves. So the GJ sells overnight were glorious, played out perfectly, breaking below levels, melting as we wanted with that Japanese yen strength, the UK equity market decline. But now the following New York session is ranging, and you don't want to fight a ranging market, right? There's no point fighting a ranging market, stressing, because the worst thing that happens to people, and this always happened to me, is people will miss the impulsive moves. They'll get fear of missing out in FOMO. They'll start fighting a ranging market. They'll burn through their account fighting a range or fighting shitty price action and bad conditions. And then the next day, when conditions are much cleaner, or days later, they don't even have the capital in their account to even enter anymore. And then they feel even more angry because like, wow, the fucking market destroyed my account. Now it's moving so clean. This is bullshit. It's like, no, you're the bullshit. The market's not bullshit, you're the bullshit. Right? It's happened, and I'm not saying this to make fun of anybody. We've all been there. I've been there many times. Right? You'll miss the good moves, and then the market's ranging. You have these expectations that you should have continued good moves because you just jumped in a trade. You end up fighting the range. You end up going back and forth, burning through your buys, burning through your sells. You burn through your whole account, and then next day when you don't even have an account, you have to wait to deposit. The market's moving so clean, like butter, like a hot knife through butter, and then you're even more angry. Then you're like, what the fuck, man? The market's manipulated. It fucking destroyed my $300 account, and now it's going so clean. I would have made $10,000 today, man. So shut the fuck up. Right? The market does not target people's accounts. But what the market does target, listen to this, okay? You know how people think brokers target your stop losses? That's 100% wrong. But what the market does target naturally through its development is human inefficiencies and weaknesses. The reason why 99% of people lose isn't because 99% of people are being targeted by brokers. Otherwise, people would never do this. If it was proven that brokers are targeting you, nobody would ever take this risk. But that's never been proven, and it's never been validated. It's all just been rumors. What's proven is that the 99% of people who lose also have the tendencies of a gambler. They're also very emotional. They also make emotional decisions. The market naturally takes advantage of human inefficiencies and weaknesses. If you are emotional, the market will eat you alive. If you get too tired, if you are too exhausted, the market will eat you alive because you're going to make a poor decision. If you have something impacting your trading outside of the market, like you have something impacting your life, whether you're going through a divorce or some type of drug addiction or whatever it may be, the market's gonna eat that alive. The market naturally, through its development, because it's made by humans and it's made based on human psychology, takes advantage of human inefficiencies and weaknesses. Right? So if you just happen to fall into that percent of people who have poor emotional behavior, who don't follow risk management, who don't have a trading plan, who don't study the markets, well, guess what? The market's going to eat you alive like it's meant to do. The market is designed to kill those people. For every one successful winner in the market who's a consistent long-term trader, you probably have 10,000 losers. And for example, what's very scary is on the internet, and even if it's in the stock market world, let me give you guys an example with the GameStop stuff, the AMC stuff, right? Remember when GameStop and AMC were booming, all these rumors, all these spikes, and you saw that all these people are making crazy money off it. The sad reality is, and what you're not going to see on the internet, is for every one person who went on Reddit or who went to a forum and said, look at me, I made 100,000, I made $1 million. There was 10,000 losers who jumped in at bad times, who didn't understand what they were doing, who tried to follow a social trend, and who lost, and who also won't share their loss. Who's going to come and say, I just lost all my fucking money, or I just burned all this shit? No, that's not going to be the majority. Just like social media, people show their highlights. People show their best life. People show the best situations possible. You know what I mean? If users made money, first of all, retail brokers are not the ones who pay you out. The liquidity provider is the one who pays you out. The retail broker is the middleman between the client and the liquidity provider, right? A retail broker rather have someone who has a larger account and who is consistently trading with large lots and using volume rather than having 10 retards with $100 accounts burning and depositing it using penny lots. All right? The retail broker is successful based on volume, on two types of volume. Volume of clients, meaning the number of clients they have, and also the volume of the order flow those clients are using. A retail broker would much rather have 5 clients who have $100,000 accounts constantly using 10 lots and 5 lots every day and using 20 lots or higher, rather than having 100 clients with $100 accounts using penny lots crashing their account. The broker gets much more payment through the commissions and volumes used and higher volumes used, rather than having 100 retards depositing $100 accounts and using penny lots and crashing it. Okay? So even though people think retail brokers are against them, if you are with an actual validated retail broker who has thousands of clients and has been known to pay out their clients, they would actually much rather you either deposit a large amount or develop into a larger amount where you're going to be using more consistent volume. For example, if you ever set up an IB with any broker, your IB is purely based on lots and volume. You could have 100 people sign up. It doesn't matter. Unless they start actively trading and are involved in that trading day to day and using that volume, there's no activity there. Right? So you have to understand, on social media and that social media environment, that toxic social media environment has leaked into the trading industry, where all these marketers and influencers are trying to sell what's easy and convenient. This has people only sharing wins, only sharing highlights, just like social media influencers only share their best moments. Vacations, the car they're driving, the dinner they had, the nice clothes they're wearing. They're not sharing themselves a picture of them looking the worst, taking a shit in the morning on the toilet, right? They're not showing their goods and bads, the trial and error, the tribulations. They're only showing the best of the best. That's why social media is so extremely toxic and fake. All that has been leaked into the trading industry now. So even with the stuff like AMC, even with the stuff like the GME stock, where you see, oh, look at these guys, they made so much money, they pumped it up. For every one winner you had in that stock market trend, you had 10,000 losers who lost their money, got depressed, and didn't say a word about it. They're not going to go publicly say it. Everybody else is winning. Why are they going to be the one person saying, fuck, man, I just lost all my money? Right? And you think retail traders, when GameStop was initially doing that heavy whipsaw movement, you think retail traders could fucking handle this whipsaws up and down here? Everybody's trying to jump in buys. Okay, what about when it comes crashing down 50% within an hour or 4 hours? You think retail traders or new clients can understand these waves and play that accordingly? No, they're jumping in buys here because of the trend, because of the hype, and they get fucking wiped out. I even had this right here. You know how many retards are getting fucked up and down this shit? It's retail traps. It's just the hype. You know what I mean? It's nothing actual of high probability to trade or something of actual knowledge or based on technicals or fundamentals. It was something based on pure trend and hype. Whales made the money from the pigs. I like that. And look at that. Look at that greed too. This guy's friend took 4,000 euro to 92,000 on GameStop and then put the 92,000 back in GameStop and lost it all again. Look at that greed. Bulls make money, bears make money, pigs get slaughtered. No, I don't have a signal service. Capital Hungry is a financial market service where you get access to actual financial market information, analysis, and content. Not, hey, pay me $200 and take a GBPJPY here. Oh, sorry, it lost. No, it doesn't work like that. This isn't a signal. Capital Hungry isn't a signal service. Capital Hungry is a financial market service regarding that. So if you go to Capital Hungry website, you don't see anything about signals here. Right? You also get all the free resources first. And here, you don't see anything about signals here. Yeah, obviously, it's called a business. Business is business. You fucking, like, what the fuck? It's still a business. You have... And why would I give this stuff for free when just the news terminal cost me $20,000 a year? Why would I give it for free? You think? Doesn't even make any sense. A business is still a business. Just like a broker is a business. Yeah, these are the type of retards that are going to be losing. This guy can't even tell the difference between signals and, like, you know what I mean? having a news terminal or having actual economic data and information. I do, yeah, we do. Yeah, I don't understand what this guy's saying. You know, this guy used somebody's signals and got raped. You know, this guy can't even tell the difference between social media and real life. Yeah. Yeah, I think this guy's a little bit retarded, the way he's talking. Yeah. I have a business, correct. But there's a big difference between signals and telling people, hey, we have a 90% win rate. Hey, follow this strategy, follow this method. You'll get riches quick. You'll get a Lambo. You'll get a lifestyle. It's a lot different than having a business in the financial markets regarding economic data or information in the financial markets that I personally have to pay for to even distribute. You know what I mean? Like, I have a license with Reuters, Icon. And that's just one part of it. The economic data is just one part of it. Okay, so anyways, we did not get to execute any trades. We didn't get to execute anything on GJ. No clear price action confirms for the sells there. We already had the strong impulsive moves from the drop overnight, and it looks like we're just going to be in a pullback phase here for the New York session, and then possibly get that pullback and continue to drop later on. Gold has just been in this higher time frame range and consolidation zone still. No point trying to fight this range on gold when we're zooming out. We didn't get clear-cut confirms on either side. GBP USD is also just ranging on the lower time frame here. Oh, yeah. Right? Yeah. Euro USD as well. In your streams, you always say, did anyone take that sell we called out? You're calling out trades. Though those are just trade ideas. It's not a signal. I'm not saying, hey, put your entry here, stop loss here, take profit, use this much risk. This guy's fucking... this guy's a little bit of a retard, yo. I feel bad for people like this, to be honest. Hey, if you guys don't want me to do stuff like this, it's fine. You can just go try to figure it out yourself. Doesn't matter to me. He came from Raja's stream? That's okay. But anyways, guys, NYC didn't bring too much volume or clear-cut information. We didn't have good volume through New York session as well so far. We had very strong movement through London session, but nothing we could really execute on as per scalps with our pre-planned trade ideas. So today is a no trade day. Okay? It's not the same thing, bro. You got to be a full retard. Like, you probably have the self-awareness and conception of like a fucking toddler. You know what I mean? Yeah. Yeah, like this guy making himself look real. People on the internet are so lucky no one can see their face. Because if people could see their face, they wouldn't say 90% of the shit they say. If nobody knew what they look like or their real name, they wouldn't say anything. They wouldn't even say anything. They'd be sitting there quietly. You know what I mean? But because they're behind a keyboard, they get a little bit of courage. They get a little bit... the normal shit that they would never say in public because they're way too dumb and they're way too shy and emotional, they say on the internet, you know? So, like, this guy just sounds stupid and retarded, to be honest. But anyways, this stream's been running for like 2.5 hours. New York session is just ranging. We didn't get to execute on any trades. Today's a no trade day. And we're going to call this an end of the session here, all right? We're not going to force any trades here. We're not going to try to jump into some bullshit. We're not going to make an emotional decision. All right? through this stream, we went through some key fundamental points, which is on your YouTube screen right now. We went through the economic events and the impact it was having. We lined up trade ideas on gold, GJ, GBP, USD, Euro USD, UCAD, and US 30. Sadly, through our New York trading session, we didn't get to execute on any of those trades because we didn't get the clear-cut confirms we needed. All right? Don't forget, as manual retail traders, you have a lot of emotions involved and other factors that will impact your decision-making process. So make sure you stay smart and emotionally neutral as well. This will obviously be able to rewatch for anybody. Oh, here it is. He's a Daniel Savage fan. There it is. Now it comes out. Daniel Savage destroyed me. There it goes. This is probably Daniel Savage. There it goes. Now the truth came out. He couldn't hold it anymore. We knew you came from Daniel Savage, you fucking retard. You dumb motherfucker. We fucking knew it. Yo, our analysis is always on point. He couldn't hold it anymore. He had to type it. Fucking Daniel Savage got you, man. What are you talking about? Daniel Savage just fucked his chat. Nobody begged Daniel Savage for a shout out. He played one voice chat where he was begging me not to post a video about him, calling him out. Daniel Savage was begging me not to do this video about him. Begging me not to do it. I said, bro, why the fuck would I do it? And why the fuck would I not do it? All you ever did was use my shit, use my analysis stream and never give me even a shout out. That's all I said. I was like, if you give me a shout out, maybe I'll think about it. But I was gonna post it regardless. This was gonna be done and said posted regardless. You're saying Daniel Savage beat me or roasted me because something about a shout out when there's literally a video with 20,000 views, hour-long roasting this guy, and we just roasted him in this session too. Bro, go talk with your dad. Why are you bothering us? Go talk with your dad. You guys are a family. You guys are a family, bro. Go talk with your dad. Go talk with your father over here, yo. Dom Toretto. Go talk to Dom Toretto over here. Depend on family. Family will get you success in the markets. Maybe talking to 20 to 40 girls a day. maybe trading while you're having fights with your future wife. You fucking retard, bro. You got fucked. Thank you for exposing yourself as a Daniel Savage fanboy, or probably just a Daniel Savage fucking account. It's probably Daniel Savage himself. Yo, he had to say it, eh? He couldn't hold it anymore. He couldn't hold it. That was the truth. It had nothing to do with signals. It had nothing to do with me. It had nothing to do with economic data, fundamentals, technicals. It had everything to do with Daniel Savage and the marketers. That's how fucking manipulated you are. No, I deleted all my YouTube videos just because people are not going to learn from them regardless. But anyways, that's funny, bro. That's funny. Daniel Savage fucking sucks, though. We roasted him. If anybody wants to watch that here, go watch that here. Full roast of Daniel Savage, his services, signals. He used to be a credit card scammer, everything. Do you guys know Daniel... Wait, let's find the credit card scam. Here, this was when Daniel Savage was a credit card scammer. Cash flips, too, before Forex scamming. Remember this? Remember when he was doing credit card scams? This was like a couple months before his Forex came out. Yeah, look at that. This is when he still had a hairline. Funny things, funny times, funny times. We roasted the fuck out of this guy though, holy. He even said it, my old credit card scammer days. I always love roasting a man at the end of the stream. Today it's Mr. Rager89. You just fucking caught it, bro. I wish we knew your real name. Because you would be getting shredded if we knew your real name, man. You're so lucky you can hide behind a fake profile and be a pussy bitch of a man and be a little feminine pussy. You know what I mean? You're so lucky you could hide behind your screen. If we knew your name, if we knew what your face looked like, you'd be fucking catching it right now. You'd be probably going to a suicide hotline. You know what I mean? But yeah, thanks for letting us know you're a Daniel Savage supporter. Anyways, that's a pretty funny way to close off the stream here. Someone said, "Are you Rager99? Are you a pangender?" Rager identifies himself as the 55th gender, which is retard. Gender number, the new, wait, how many genders are there? 56 or 57? Rager89 is the new gender. Retard. Identifies as retard. Anyways, everybody, thanks for the good times. Thanks for the support. I'll see you guys later. That was pretty funny. How many dislikes does it... Yo, does the stream have 1 or 2 dislikes? How many dislikes does the stream have? I bet it has max 2 or 3 from their accounts. How many dislikes does the stream got? 2? There you fucking go. Analysis on point. Analysis on point. Alright. Anyways, everybody, take care. Have a wonderful day. I'll see you guys later.